Twitter Q&A here. The first question from Alan, one of my followers and Market Flow Trader community members. The question is, how do you manage your emotions during drawdowns and maintain a clear mindset to bounce back in trading? How do I keep my mindset clear? I think at the end of the day, that you have to basically have one universal truth that no matter what, if you're the best day trader in the world, you're gonna have red days or you're gonna have losses. Like we talk about all the time in the Market Flow Trader community, if you place 100 trades and your win-loss ratio is 70%, which is very high, if it's 70%, you are going to lose 30 trades out of 100. Now, those 30 trades could come back to back. They could be 3 in a row, 4 in a row, 5 in a row. They could be 10 in a row. You don't know exactly how many it's going to be, but you do know that if you're hitting 70%, you're going to have losses. So accepting that alone is going to make you a better day trader, because you know that when you do have a loss, you're like, well, that's one of my 30. I'm going to place 100 trades this month. I'm going to make 100 trades, and I know that my win-loss ratio with my strategy, with my edge, is 70%. So I can just accept that I'm going to lose, but my whole goal is if I'm going to make 20 points from all my winners, I'm going to lose 10 points. That means I'm going to make 1,800 points total profit after the 300 point loss. So I'm losing 300 points, but I'm making 1,800 after subtracting the loss and the winner. So the net is that I'm making, 3, 4, 5, 6 times what I'm losing here. And that's the goal. Knowing that, understanding that is going to handle the emotions, keep the emotions out of it, because you're just looking at the data. If you don't know your back testing, you don't know the data, well, then you don't have that power and you can't have that confidence that like, hey, it's part of it. I'm going to go through drawdowns. I'm going to have red days. The next question, how do you walk away from a trade and not try to FOMO back into the market, whether you are up on the day or down on the day? I have that happen a lot. How to keep your emotions in check. That also kind of plays into the idea of taking 100 trades, the losses, keeping those emotions in check, and knowing that if I look back at all the times that I tried to make back my losses, I tried to make back the money, I get in here and the market pushes up and then it pulls back, it stops me out, and then it pushes up again, and then it crashes. Like, I know that if I take my trades, I take my setups, I jump in, I get long, I get stopped out for break even, whatever it is, and then the market pushes back up here, it's like, hey, it's okay. Like, I missed out on the trade, whatever it is, but look, now it's pulling back. So you can't sit there and stress about every little trade, and you got to be able to walk away. Sometimes the best thing to do if you're in the moment and you're losing money, whatever it is, if you're having a red day, a bad day, maybe you lost 2 trades in a row, just get up. Get up, go for a walk. Spend 5 minutes, 10 minutes, 15 minutes away from the computer. That right there will help you a lot. I think that's a good rule. Like, if you have 2 losers in a row, just get up, go for a little walk, spend 5 minutes thinking, go outside, look in the sky, look at the sun, think about where you're at right there at that moment. Because you know that if you keep trading, you go on tilt, you're going to end up losing a lot more money than you have to. And that's one of the things that we're trying to avoid, right? We're trying to be consistent. We're trying to avoid those big losses in the tilt. Alvi asks, you're waiting for a breakout and it finally happens, but it doesn't continue. Do you wait patiently for a continuation, or you just cut your losses and run? Well, my friend, great question. So I think at the end of the day, it really comes down to this kind of the same chart we were looking at a minute ago. But if you're going to enter a trade, let's say you enter a trade here and you're looking for a breakout here. I'm trying to find something that might have been like kind of not going at first, but here's an example. Like, let's say you're trying to buy this pullback here, this breakout right here, your target's up here, and then that first, let's say your entry is like right here at this level. So I'm entering here at the 10s, my target's up here at the 18s, and my stop's going to be right here. If it doesn't want to go right away, do I take profit? Do I cut it off? No, I just sit there. I'm like, hey, look, my stop's here. It's, it's kind of pushing, it's looking like it wants to go higher, and there's that breakout. The problem is a lot of traders, what they do is they get in at a great time, it pushes up, and then it pulls back to their entry or to their maybe break-even stop. It stops you out, and then it ends up going higher. I know that's happened to you guys. It's happened to me a million times. So the thing is, sometimes it's not like a time. Like, you can't sit here and be like, well, this has to happen in 5 minutes. This has to happen in 2 minutes. Like, there is no time requirement for this move to happen. So just because it's taking longer than you would want, You know, just because maybe you bought here and you're like, I want it to go straight to my target in 1 minute. Just because it's not doing that doesn't mean the trade's invalidated. The trade's only invalidated once it breaks through your support or your level that you're looking at. Like right now, if this breaks below here, well, then I'm like, okay, you know, now it's invalidated. Now, you know, now I'm going to get out of the trade. I'm not going to sit here and be like, well, you know, through this whole thing here, I think there's a great way to look at it like this. Like if this is your target right here, let's say your target at 220 and it pushes to right here at the 17s. Well, I definitely don't want to go from, you know, being up 7 points to then being in the red. So if I'm entering here at the 10s, now we're pushing up here. I would say your best bet is to put your target or put your stop loss at that point right below that like kind of recent little swing low or that little low on this move up. So if the market pushes to your first little target there and then it pulls back and then gets denied here on the second, well, I'm going to put my stop right here because I want to make sure that I don't give back, you know, all the profit. Obviously, I want more, but I'm not going to let it all come back. And I've done that. You know, I do that a lot of times, actually. There's a problem that I have sometimes. I feel like giving back that profit, my friends. I don't want to do it. So lock in that profit. Don't be afraid to lock it in. There's always more trades to come. That's like the best thing to really focus on is like, we know that no matter what, there are more trades coming. So if we get out for a break even, we get out for a small profit, no problem. On to the next one. Here's a great question about stop losses, saying that his stops are too tight, that he gets stopped out, and then the move happens exactly like he said. Again, this goes back to the idea that I just said. Like we just talked about, having your stop at a place that invalidates the trade. The problem is people enter trades and then say, hey, I'm going to enter here. I'm going to look for a 10-point move higher. I'm going to put my stop 5 handles lower, 5 points lower, 10-point profit. And I see this. The problem is you can't just enter a trade and just magically go, okay, my profit target's 10. I'm going to risk 5. Well, just because you are going to put your stop at 5 points lower than your entry does not mean the market's going to respect that as support. So you need to identify a level, identify something on the chart that's telling you that that's where if you get stopped out, it's going to invalidate the trade. I think a really great way to think about it is I want to get stopped out where I would get short at, right? Like I want to look at it like, okay, I'm going to get short if we break below this level. So that's one thing to think about. Like I want to make sure that my stop is, number one, not in an area that's going to be very easily just tapped and taken out. And then I also want to put it at an area that's going to invalidate the longs so that I'm no longer trying to get long, but at that point I'm trying to get short. It doesn't always work out perfectly, but in general, you know, you want to focus on not so much just like, hey, I have my stop for 5 points. No, I want to put my stop at a strategic point that invalidates the trade. You know, your profit target should not just be magically 10 points no matter what. It's your profit target's going to be at a resistance or an area on a previous candle that you're like, hey, I think this is where it's going to push to. You can't just simply go every trade 10 points up, 5 points down. That's all I do. I'm going to enter, exit, enter, exit, enter, exit. No, you need to be looking for places that your stop is going to be protected. Like I don't want my stop right at a support zone that I'm like, hey, it's a 99% chance that support zone is going to get tested and then I'm going to get stopped out and then the market's going to go higher. Like that's not a good plan. It's almost like if that's your whole entire plan, well, maybe you should just enter where your stop would be at because that's the support zone, not put your stop where that support zone's at. Manuel Lopez, how do you find futures better than stocks? I mean, I think everyone knows this already. Futures, the easiest, I wouldn't say easiest, but one of the most liquid, the best places to trade. It's trading every day, basically 24 hours a day. It's a money minting, printing machine. Futures, NASDAQ, the ES. If you're not trading futures, you're missing out. I don't know why you would trade anything else. Just terrible idea. Terrible idea. What was my biggest hurdle? What was my biggest hurdle to get over to being consistent? My biggest hurdle. I would think the biggest hurdle is knowing that I'm not going to get rich off of one trade, right? Like there's never going to be like one trade that I'm going to enter a trade and I'm going to make all the money for my entire life in. So like, why would I be risking, all this money to make like the most money I've ever made off of one trade if there's a reason, right? Like I'm risking way too much to make profit on that one trade. And that's the consistency problem, because if all you're ever doing is risking and gambling and trying to get that one big home run trade, well, you're never going to get on base. Like if you're always swinging for the fences, you might hit the ball every once in a while. But remember, it's 100 trades. It's 200 trades. That's what we're looking for. We're looking for consistency over a large span of time and a large span of trades. If I just get one trade, like I made $10,000 on, it's like, wow, cool. But if I have 100 trades that I make $2,000 on, I mean, that's a lot better, right? But the problem is the chance of me making one trade $10,000 on, it's going to be very much lower than the chance of me making 100 trades and locking in $1,000. I know it sounds crazy, but like to do it 100 times for a small profit is going to be much easier than one time to make $10,000 on one trade. You know, if I'm trading with a massive size, maybe that's one thing. But if I'm trading my normal strategy, I need to think that the consistency comes from me following the rules and knowing that I'm not going to get rich off of one trade. There's a lot more things to it you can learn in the Market Flow Trader community, but in general, I would say the biggest hurdle for me to find the consistency is knowing that like I'm not going to get rich off of one single trade. So why am I going to risk, you know, a massive amount or not cut off my loser or just walk away when I'm in the red? Things like that. Because it's consistency that's going to get me to that next point, not the one big massive trade. Jesse R asking about the VWAP, getting long below the VWAP. Why does it work sometimes? Why does it? I think there's a pretty good rule of like, if you are looking for moves, the overall trend, if the market's below the VWAP, normally that means it's a short opportunity. It might push back up to the VWAP. Those are going to be a little bit riskier of a trade, because if you're below the VWAP, the trend is normally down, even though we know that sometimes the market pushes back up as a long to the VWAP. If that's going on, there is probably a short or probably a better opportunity to be bearish than be long. I think you can take those trades below the VWAP. There's, you kind of think about different breakouts, different setups, bounces, levels, things like that you can look for. But at the end of the day, I normally try to stick to the idea of shorting below VWAP and getting long above the VWAP. And it'll just help you avoid some of those trades that you don't need to take. I think sometimes I end up taking trades that I don't really need to take, and they work out for me, and it's like, great, awesome. But I need to remind myself, like, there's not really like a reason that I need to take that trade. Like if it's not hitting all my parameters, not hitting my rules, then don't take the trade. Here's an trade like a bullet. Trade like a bullet asking about back testing his strategy, 70% right. However, when entering a trade, he freaks out that he's going with a smaller quantity. And how does he book the profit? But once the candle starts moving away from him, the fear, and book the small profit. My friend, it just comes down to, that's a problem that a lot of people have. It comes down to just the back testing. You got to believe. You got to look at all your trades and be like, hey, look, if I enter at this level and I get the breakout, the market will normally move 10 points, 20 points, whatever it is. Find that average. Find that average where the market moves after you're entering a trade. Once you find that average, you think about that when you're entering a trade. You know where your target is. You're saying, hey, this is my target. I'm going to take profit when we hit this target level. No matter what. Like, I'm not going to take profit early. I'm not going to move my stop. I'm going to stick to the plan. So you really got to go into the trade with that plan, and you got to stick to it. And again, it's repetition, right? Repetition. 100 trades over and over and over. Getting to that point where you're just building up that muscle memory where you know, like, hey, I'm holding on to this because this is my setup. I know that my setup pays out. I know that my setup's going to hit my target 70% of the time. So I got to stick to the trade. 100 trades, 70% of them are winners, 30% losers. It happens. I got to know the data. I got to understand the data. I got to love the data. I got to believe in the data, my friends. Frank Martin asking about how do I determine my stop loss? Again, guys, there's no magical formula to knowing exactly what you should risk. I normally try to not risk over 10 points. I don't want to risk thousands of dollars per trade, but I'm looking for like 10 points on 2 or 3 contracts. It just depends on the setup. But right now, trading 3 contracts, I don't want to lose more than $500 on a trade, really. That's kind of my goal. Get stopped out before losing more than 500. It's always kind of more so tailored to where the setups are. If I can risk less than 10 points, well, that would be great. I would love that. But at the same time, like, I really don't want to risk more than that. And I don't want to give back, massive amount of profit because I'm just putting some big risk on a trade. And I'm thinking that if I have a bigger stop loss, I'm going to make more money. That's not how it works, right? If I'm going to have a bigger stop loss just because, it's like, why? I could have easily just kept my stop at the same spot, gotten stopped out, and always re-entered. I can always re-enter the trade. People think that, like, if you get stopped out on a long, you can't ever re-enter. That's like, oh, if I get stopped out right here, I'm never going to be able to get back in. One of the questions right here, can I trade without the book map? I mean, yeah, I can 100% trade without the book map. Can I trade without the book map? I mean, yeah, I've done it. We can all do it. A lot of these tools that we use are just, things that give us confidence to hold longer or to look for better profit targets, things like that. But at the end of the day, I do think the book map adds value to my own trading. I like to see the levels, I like to see how the market's moving, where that liquidity is, and all that fun stuff. So I'm going to choose to use the book map because I have it. I don't see a reason to like not use it just because I'm trying to like prove a point of like, I don't need to use it, but I think it's a very valid tool and I use it every day for trading. And especially with the NASDAQ, seeing the levels where they're at, liquidity and all that stuff moving around, definitely great to have. So somebody's asking, how's the Bronco coming along? The Bronco's coming along great. Still waiting on tires, lift kit, and all that stuff in Hawaii. Everything takes longer in Hawaii. I don't know, it just takes longer. What's my internet speed? 1 gigabyte, 1 terabyte, whatever the max speed is here in Hawaii. It's fast. I can upload videos in a matter of minutes, baby. We don't live in the middle of nowhere, just kind of the middle of nowhere, an island in the middle of nowhere. James Hansen asking, I'm trying to improve my personal discipline whilst trading. I also find that translates into my real life too. Any tips would be welcome. Well, James, I would have to say that probably the best thing you can do is go to the gym. Getting healthy, mentally, physically, will have massive benefits across the board. Trading, life, relationships, whatever it is. And yeah, that would be my one piece of advice. If you're trying to build up discipline, you got to get discipline, mentally and physically. Nothing better than going to the gym, getting a little sweat in, moving some heavy weight, remembering why you're a man, remember why you're alive. That's the power right there. People think that going to the gym is a waste of time, but the actual benefits of going to the gym, getting that pump in, getting that physical activity, it's as a human, it's just so powerful for us mentally, physically, and everything. It's just the emotion. We talk so much about trading being the emotion. Well, like, we need to keep our emotion in check. How do we do that? Making sure that we're balanced physically, mentally, emotionally. We want to be able to go out and like get tired working out and then go to bed, sleep, get good sleep, cut out things that you don't need in your life, things that are distractions, things that are not benefiting yourself. Those are all things that'll lead to getting more discipline. Drill has an entry issue. For instance, he notices a clear trend. He waits for the pullback for the entry, and he ends up entering early a lot. So what's the best way to measure a pullback before considering the entry point? My friend, this is a common question, but at the end of the day, we already know the answer though, right? We already know the answer to this. Where do I want to be entering at? Well, right now, let's look at this thing. Market's pulling back. Let's get rid of the VWAP for now, just in the EMAs there. So look at them. But if I'm looking to get long here for this push up, I think it's going to push higher, right? All right, like, where am I going to jump in? Well, I'm not going to jump in until we break this clear trend. All I'm doing is I'm looking for these clear trends to break, and then I'm looking for a close above those trends. I want those areas to break, and then I want the breakout, the retest, and then I want to move higher. I'm not buying the dip. I'm not sitting here just like buying the dip. No. I'm waiting for that clear breakout. I'm waiting for the trend to change. I'm waiting for there to be a reason for me to buy. I'm not just, let me buy the dip and then watch the market go lower and lower. No, I'm waiting, and then I'm jumping in once we get the setup. Here, it's like, there's our breakout. We're getting in. Like, again, there's no reason for me to get long on this pullback until we see that we're getting the breakout. There's a move right there from the 04s up to the 24s, 20 points. And all I had to do is just wait for that breakout. Just literally waiting for the breakout there. Get the signal, bam. Not waiting to buy the pullback or anything like that. Just simple, easy. Caleb asks, how am I so good looking and also so good at this game? It's a question that I have to ask myself every day. I'm still not sure. I'm a very, very lucky person. How can one person be so good looking and also just so good at this whole game that we play here? This John Paul, I would like to know, how do you manage to detach yourself physiologically with each position taken? And how do you deal with your doubts? How much confirmation do you need before entering a position? Well, that's the whole point of having a strategy, having rules, knowing things like, okay, let's think about it like this. I just ask myself very simple questions before I enter a trade. Nothing too fancy, nothing too hard. All I'm doing is, if I'm trying to, let's say I'm thinking this is going to push back up. Well, what do I want to see happen here? I want to get back above the VWAP. I want the MACD to be bullish. I want to be 21. Once all those things are met, once we get the breakout, we get the signal, there's nothing else to it. No emotion, no feelings, just entering the trade. Where's my stop at? Let's say we break out over the 10s. Well, my stop's going to be like, wherever that recent low is. That's it. When you have a strategy that is simply explained here by knowing that if I'm getting long above VWAP, I'm getting long above the 21, I'm getting long once you break out, and once the MACD is lined up, what other questions do I need? What other feelings do I need? No fear, no emotion. I'm entering the trade. I'm putting my stop loss. I'm riding that momentum higher. Obviously, we're looking at the bigger time frames as well. I want to get confirmation from the bigger time frames. I like looking at the bigger time frames to get confirmation. Right now, on the 15-minute time frame, this does not look like a long opportunity, right? Like, it's not looking very long right now. So look at the big time frames, focus on the big time frames, then go to the smaller time frames, go down to the 1 minute now and look at the 1 minute and be like, yeah, 15-minute chart, not so hot. Probably don't want to get long just yet. I want to wait for my setup. I want to wait for my things to line up. I want everything to line up, and then I'm going to enter my trade. Trader 808 asking, what is my most go-to, most consistent setup? I think we already know this one. It's the 3-minute breakout. Very simple. We teach this in the Market Flow Trader community. The breakout we just talked about, the 4 rules, break down, break out. The great thing about it is we don't need to guess. We don't need to predict. We just got to trade the setups. Over time, how did I eliminate the fear from entering a trade? Again, this all goes back to testing, and knowing what your strategy will hold. What is your plan? Having a plan. If you have a plan, then you don't need to have any fear, because like, number one, you're going to get stopped out. Number two, you're taking profit. Like, having a plan eliminates any reason to have fear. Trade with small size. Trade with your plan. Focus on the strategy. Zian Lee would like to ask about subjective element to your trading strategy. Often when I look into what looks like a good breakout setup, in my opinion, I end up losing, but you usually manage to dodge the trade. Cheers. Zion Lee, I think that just comes down to, understanding where the market's at, the levels, the pivot points, what the market's doing that day, what's the trend doing, trying to fight the trend. I mean, there's a lot of things to it, and that all comes down to just having experience and being in the market for 7 years now. Trading is not just a hobby, it's a lifestyle. You know that better than anyone, but what made you choose this path? What was the catalyst that sparked you and your interest for passion for trading? And how do you stay on top of your game and avoid losing money in this fast-paced, dynamic market? Tell us your secrets and tips on how to trade smart and safe, no matter your skill level. I think at the end of the day, like I've said this a million times, you guys already know my story. I came from nothing. I built everything that I have. I worked hard. I put in the work. I put in the time. I put in the effort. I didn't ask anyone to teach me, other than the fact of me just wanting to do it. I didn't ask for secrets. I didn't ask for tips. I literally just went out and started doing it and researching and trying to figure it out and doing it myself and trying to find out why certain people did certain things, but then why did it not work for me? And that's why every trader has to find their own way in this market. You can try to copy anyone's strategy out there, but at the end of the day, everyone sees the market a little differently. Everyone trades a little differently. Everyone's just wired a little differently. So you got to really kind of just find a strategy that you like, but then start tweaking it and messing with it and trying to figure out okay, I like this part, but I don't like this part. And then, move things around, do the work, put in the effort, spend the time. You got to become obsessed. You got to fall in love with this. It's really almost impossible. Day trading, I would say, is almost impossible. If you find success, that's because you put in the work and you put in the effort. But if all you did was watch a couple videos on YouTube and you tried to do it a few times, you lost a couple $1,000 and you gave up, well, you're just a part of the 90% that gives up and stops. But, the goal here is to find consistency. And that's why the micros are so great. Trade small, focus on your strategy, show up every day, watch how the market moves. See today, the market made a massive move today. So now you're hey, wow, when the market's really good, it's hot. It's really easy to make money. When the market's giving us setups, it's easy to make money. So what do I know? That if there are setups, I could make money easily. If the market's not giving me setups, I'm not going to make money easily. So what should I do? Well, I shouldn't trade those bad days. Should stay out of the chop. Stay out when the market's not hot. I'm going to stay out of it, right? Like I'm going to stay out of those days when the market's not hot. And that's like just experience in the market. I think the only thing that I can really give you as a tip here is just getting experience in the market. The longer you do it, the more time you put in, the more you're going to learn. And that's the only way to do it. You can read all the books, you can watch all the movies, you can read every course out there. But if you don't put in the time, you don't put in the work, you don't put in the effort, you're not going to get the reward. It's that simple. There's no secret. There is no tip on how to get rich other than just wanting it more than the guy that's next to you. There's always somebody right next to you that's also trying to do the same thing you're doing. So you got to figure out how can you beat that guy in this game. Life's a game, my friends. There it is, answering all these fun questions here on Twitter. Hopefully you guys enjoyed the video. It was always a great time answering questions on YouTube.